In this episode of On the Tape, I welcome back JB Mackenzie. JB is Vice President and General Manager of Futures and International at Robinhood, which of course includes event contracts. I met JB out at the Hood Summit in Las Vegas in early September, where I conducted a panel on the evolution of prediction markets, which included JB, Luana Lopez-Lara, the co-founder of Kalshi, and my fellow Seawolf partner, Porter Collins. Well, that was at the beginning of football season, and not only have volumes grown exponentially, there has been endless news flow in the event contract sector, including mergers, partnerships, capital raises, and new entrants, all trying to get a seat at the prediction market table. We get into all of that, including Robinhood's recent acquisition and partnership with Susquehanna that will help accelerate their growth. But before I get to JB, I wanted to opine on some other events that are moving markets at the moment. As planned, the Federal Reserve officially ended quantitative tightening, QT, yesterday. Over the period of about 3.5 years, the Fed reduced its balance sheet from $8.9 trillion to $6.6 trillion. Congrats on that. We know about the recent turbulence in the repo and funding markets, and I have said a few times over the last month, pay attention to the head of the New York Fed, John Williams, who runs those operations for the Fed. We'll get another rate decision from the Fed at their meeting on December 10th. All signs point to a cut of 25 basis points, but what is getting the most attention at the moment is who will be replacing Jerome Powell. Kalshi's market shows Kevin Hassett, current head of the National Economic Council, as the front runner with roughly an 80% chance of being named as Powell replacement. I believe this has had more of an impact in recent weeks on the markets than the odds increasing of a Fed rate cut at the upcoming meeting. Why? Because Powell will only have 3 rate decisions left following next week's meeting as his term ends in May. And because Hassett is a self-proclaimed dove, and if appointed, he will almost certainly cater to Trump's wishes for much lower rates. I will also note that Hassett, even more so than Bernanke, will watch the stock market closely and take action to cushion or prevent any stock or bond market sell-offs with whatever tools he has available. I'll also note that Hassett co-authored a book in October 1999 titled Dow 36,000. He was right, but it took 22 years. While most people know that the Federal Reserve rate cuts only impact the shorter duration of the yield curve, most closely reflected in 2-year yields, we have seen a rally in 10-year bonds as well, with yields last week dropping below 4% for a brief period. We have since moved back to around 4.1%, but this bears watching. While the Treasury Department, led by Scott Bessent, continues to focus on issuing more T-bills, which makes sense near term with the Fed cutting rates, these bills by definition mature quickly. And if the Fed undertakes a series of rate cuts in 2026 while ignoring inflation data, I believe the markets will sniff it out and we could see 10-year yields rise even with the reduced issuance on the long end. Ironically, the same way an inverted yield curve didn't portend a recession, this time around, a steepening yield curve may not indicate a healthy economy. Yes, the Fed can reignite QE and make asset purchases, but it'll be hard to control the U.S. dollar. And at some point, we need to deal with nearly $39 trillion in national debt. Sticking with debt and the phrase, no good asset goes unlevered, I hearken back to the years leading up to the GFC, when homes became the centerpiece of the economy and the prized asset of Wall Street, and investors used and created products to leverage and maximize returns. It was the meeting that Vinny and I had with Moody's in late 2006 when we learned the rating agencies didn't have a model or scenario that used down home prices. It was then we realized how fragile the system was. Well, fast forward to today, and while Bitcoin and crypto are completely different than owning a home, although both can result in hodling, we are seeing the impact that leverage can have on these assets. I have no position in either Bitcoin or strategy, but it is worth spending some time and actually studying the balance sheets of some of these crypto treasury vehicles. With strategy trading very close to its NAV relative to its Bitcoin holdings, and with both interest payments and maturities coming due on their debt, it bears watching. While owning roughly 3% of outstanding Bitcoin might sound low, they are the largest corporate holder of Bitcoin, and there are many copycat companies and investment vehicles out there with the same trade. So while Bitcoin investors are trying to gauge whether strategy is the horse or the cart during this volatility, I will say, without offering investment advice, it's always better to just buy the underlying asset than trying to deconstruct financial engineering. Sorry for the long-winded opening, but I felt there was a need to discuss some of these topics and issues that are driving the markets at the moment. So without further delay, please enjoy my conversation with JB Mackenzie, Vice President and GM of Robinhood, who oversees their event contract business, where you can trade everything I just talked about, as well as NFL picks that I will give out at the end of the show. Welcome to the On the Tape podcast. I'm your host, Danny Moses, and today I welcome back JB Mackenzie. JB runs Robinhood Futures and International Business, including event contracts. JB, welcome back.
Danny, thanks for having me back. I'm glad I earned a return trip here. I wasn't sure.
Well, we met at your event in Las Vegas back in September at the Hood Summit. I had you on the tape then. And then to quote Ron Burgundy in Anchorman, boy, that escalated quickly. I mean, so much has happened since that time period. I mean, that was the beginning of football season. The volumes have exploded across the board, across the entire industry. And we're going to get into not just event contracts and prediction markets. We'll take a step back. But maybe if you could take a step back for a second and talk about your background and what led you to join Robinhood, I think in early 2023, just to give people a little background on you.
No, absolutely. I mean, I joined Robinhood after spending about 14 years at TD Ameritrade and Charles Schwab. During that time, I was fortunate enough to work with a group of people that were focused on offering incredible trading tools to retail investors. And that's really where I got into the marketplace. But my main focus was working on futures and opening up our global businesses. So opening up businesses in Singapore, Hong Kong, and mainland China. And so for me, as TD Ameritrade got acquired by Charles Schwab, the interest for me was what kind of comes next, right, Danny? So it's like, I'm always excited about that next thing, that next market, the next opportunity. And I had the opportunity with Steve Quirk, who I worked with over at TD. He had said, look, over here at Robinhood, we have this interesting client base. It's young investors, mobile first, really focused on derivative products. What do you think about coming over here and helping us launch futures as well as other products? And, ironically enough, I said, wow, I can leave this one company where it's already established and have a nice, simple life. And I can go move into what I almost call pure chaos, because it was, how fast can we move? And I think the culture of Robinhood is being innovative and client focused. And that's what we started to do. And it's hard to believe what we've built in less than 3 years.
It really is. And it was technology first, and then obviously always catering to the client, obviously, but then the products you guys have launched, and we're going to get into all that, including one of my favorite things, which I think is now new to the platform, which is short selling, which you announced back in September, but you really now offer the gamut, all products and services kind of available to you. So I'm going to guess when you joined Robinhood in early 2023, the original job description did not have building out prediction market platform on it, right? So give me a little breakdown of your day right now, of how things go. I know right now you're in Washington, so I won't ask the secret meetings that are going on there, but talk to me a little bit about day-to-day role now, given the expansion of kind of the product offering.
Well, so I think the story of how we got into it is a good example of it. And so I had just landed in London a little over a year ago. And in the conversation, Vlad, our CEO, was over there as well. He asked me to stop by his hotel. And as I sat in the lobby talking to him, he said, I think the election contracts could be really interesting. I know you're about to launch futures, but do you think you could go build something that might be intriguing to me? And I think that's sort of the microcosm of how it works at Robinhood, which is we develop a strategic plan, we build toward it. But then when something becomes of interest, like with a client, like it has with event contracts and the election contracts, we look to see if we can pivot. And what we did, Danny, was amazing. I mean, truthfully, the people on my team that worked 24 hours a day, 7 days a week, in 4 short weeks, we pivoted from launching futures to launching election contracts. And once we did that, we did over 500 million contracts in a little less than a week. So when people say to me, how does your day usually start and how does it end? What I tell them is, the plan is usually to see what happened in overnight markets, figure out what's happening in our UK business, where do we see US markets launching with futures and so forth. And then we look to see what's coming up on the economic tape, right? Is it earnings? Is there something else from a GDP number print, so forth, that has an impact? But then it really comes down to being is what are our clients telling us they want and what they like to see? That's what was really the evolution of the election contracts. But if you said to me, hey, you're joining, look at your job description. My job description was focused on doing 2 key things. It was one, building our UK business and launching that in less than 12 months and launching futures. The second one got pivoted out by an extra 2 months. But what I can tell you is it's built 2 really strong businesses. But that prediction market business, fastest growing business we have ever had or launched at Robinhood, really just an amazing product to launch, but more important to watch our clients interact with.
So before we get into the prediction markets, and we're going to get there, obviously it's a big focus point. You talk about partnering, partnered obviously, Kalshi, you did on, to kind of grow that side of the business, but you also partnered with CME on the other side to kind of grow futures. Talk about how you're seeing customers on your platform right now kind of move around, and there's no shortage of activity or reasons to trade all your products. I'm curious what kind of you're seeing on the platform here.
Yeah, I mean, I think what's really good is that I've been fortunate enough to work with really good partners in my 20 plus years in the business. So whether that was CBOE, where we decided to launch index options last year, whether it was CME with futures, or again with Kalshi and ForecastX on the prediction side, really what I found is that our clients are really much more sophisticated than sometimes we realize. We think of Robinhood as being younger investors and therefore less sophisticated. I don't think that's a true statement anymore. I think what's happened more than anything else is the power of the mobile device has sort of leveled the playing field, because they can accumulate so much information. And now, I mean, you remember in your day, a Bloomberg terminal was the platform that you got to get all your news, your charting, and your trading. Now that all fits within a singular platform on your mobile device. And I think for Robinhood, what we've really seen is our clients have demanded more products and more sophisticated products. So whether they start off by trading equities, graduate into options, and now move into futures, or do short selling, they're also using different types of platforms. They're using our mobile platform to trade. They're using our Legend platform to trade. They're really expanding out. And I think that's what we think has been such an interesting thing for me, at least, to watch is that we are one of the fastest growing FCMs ever at the CME. We blew through records that we built when I was at TD Ameritrade. And it was because we built it on sort of our product offering on sort of three key focuses, right? First focus was creating a great technological experience, right? Very simple, straightforward, how to use it. The second of it was to listen to our clients and focus on making sure that price wasn't a friction point for them from a commission standpoint. And then the third thing we did was we built with education. So what we found is that an educated investor is a longer term investor, and that it lets them move across into different asset classes depending on what they want to. So they want to do equities, options, futures, crypto, prediction markets. We're offering all of those to them from a singular platform, and they can kind of build up and see what makes sense for them. So today it might be precious metals. Tomorrow it might be crypto, depending on where things are moving. You can move back and forth, and it creates that super app. And I think that's really what's been the powerful thing for Robinhood.
I think that the democratization of information that's out there and available to the retail investor is almost institutional grade. And at the same time, I would say, having been from this background, that the institutional research has degraded to a degree, while kind of the access, whether it's on X or whether it's on Substack, whatever it might be, they can take that information, use that, and then go to your platform. I am hopeful of the day, we joked about it before, that you will have research available on whether that's Robinhood specific or partnering. I'm sure that's going to be coming on the horizon. All right. So let's talk about, for our listeners and viewers that don't understand prediction markets and event contracts, what are they? How are they allowed to trade on your platform and others that are out there? And just maybe a little bit of regulatory overview of kind of where we sit right now within the sector.
Yeah, so let's start off with what they are. And I think, Danny, the easiest way to explain them is they're a probability trade, right? So basically think of everything being a probability of 100% to start, right? And so if we look at Fed rate cut, you look at something there, and there's a probability of, let's say, 66% chance that a Fed rate cut can occur in the December meeting, right? Well, that means there's a 34% chance that you could actually it not occur, or you could buy that. And that's your upside to it, right? Because it equals to $1 or 100%. So for people looking at trading these markets, the nice straightforward piece to it is that it really becomes a probability trade. The example I give to people is I talked to my 14-year-old daughter, and we were actually talking about the Fed rate cut. And she was very intrigued because she saw it on the Amazon Alexa, this news cycle that had my name with it. And she said, well, walk me through this, Dad. And I said, well, look, here it is. It's at 66%. You know, I can buy that 34. And if it happens, I will get 34 cents out of that dollar that I traded. And she's like, okay. And what happens the next day? She asked me the question, well, did it happen? I'm like, well, it doesn't happen for another couple of weeks here. But she said, well, what did it improve? And it moved, right? It moved forward. It moved up, right? Because there were some probabilities that came into place. Now it moved to 70. So I said, look, I went from having that 34 cents. Now it's moved up by 4 cents. So I've gained 4 cents in my pocket. I could close out of my trade and gain that 4 cents, or I can hold it till it goes to resolution. So to me, what's really powerful about these products, Danny, is that it's basically looking at a probability trade out of 100%, right? What do you want to do? Now you can build your portfolio larger, so you can build it in one, as small as $1 or as big as 1,000 or whatever size you want to. So it really gives you that optionality that I think becomes really powerful for a product.
And then talk about, you know, the amount of liquidity that's obviously in there. Most of your contracts, well, all of them, have an amount that's available to kind of trade. I know that Susquehanna, we're going to talk about them, is a partner on the market making side, and Kalshi uses them also. So, using Kalshi and other players there, we'll get into that as well. Talk about that, because you need someone to make these markets to make sure that these things are balanced over time. And some of your contracts have millions of dollars to trade, and some, have $1,000 to trade, obviously.
Yeah, so the market makers play an important role, just like they do in the equity, options, and futures markets, right? So they're out there helping to create markets. But what's also really intriguing is you can actually trade both sides, right? So we actually have customers that are actually building this markets at the same time as the liquidity providers. So what this does, it creates an actual true market belief of where that price is. So using, again, that Fed rate cut is at 66%. That's a combination of market makers and customers that are out there willing to take the two sides of that trade. So I think, to your point, having liquidity providers is really important, because they're the ones that help build initial liquidity. But retail participation becomes even more critical, because guess what? Someone might improve upon it. That's a retail trader, because they have a different belief than somebody else. And I think that's where we're really starting to see the maturity of these markets come in, is they're acting just as I said before. They're looking just like an equity, an option, and a futures market, where you have this mixed liquidity, which becomes really, really powerful to get great pricing.
Right. I just want to reiterate to people that when you're using the 66-cent example to kind of make 34 cents, we'll forget about the penny that you add on for commission for a minute. Effectively, it's laying 2-to-1. You're risking 66 cents to make effectively 33. So for people out there, when you get into the sports side of the discussion, which we can, that's how to think about it. And really all it is just a simpler version of Fed fund futures, because inevitably the markets are pretty efficient. And whatever that market is, it will translate to exactly but it's a less intimidating way to trade. And for information source, it may help you in other things that you're doing. So I know that people look at all your contracts, the percentage that they trade versus what they're looking, it doesn't really matter, because you're there to supply that type of info that's kind of out there. So just one more step back on the regulatory front. It's regulated by the CFTC. You can be 18 or older, pretty much in all 50 states, to be able to kind of trade these event contracts. You don't have to go into a ton of stuff there, but just give that. I think that's really important for people to understand. You're not taking risk. You're just supplying. You're just being the exchange here and providing.
Correct. We're actually created, this market is actually created by us, just like we do our futures market, right? So if you think about the futures market, somebody who wants to trade E-mini S&P, what do? They connect into us. They open up an account. They have to meet certain criteria with us to be able to be approved to trade that account. Once they're approved to trade, then what we do is we provide them access to that market. That market is basically a pass-through. So what we do is we offer Robinhood customers access to, in this case, the CME as the example for the exchange, or when it comes to prediction markets, into Kalshi or ForecastX. So it's really straightforward. So you get approved, you have to meet certain criteria, you have to have trading experience, you have to fund your account. We do typical KYC, AML, all that type of stuff. I can't give away all the secret sauce of what it does to get an account open, but really what we do is we build it that way. And then once that's done, it is actually you participating in a market with other participants, whether those are liquidity providers or other retail. That's what you'll find out when you participate in the market, which is the same thing that happens in other futures markets as well.
I think one of the best things you guys offer, as well as Kalshi, are 3.5%, 4%, wherever the rates are on your cash while you're sitting there. And I won't get into comparing this necessarily to DraftKings and FanDuel, et cetera, as it relates to sports, but that's something that they don't offer as well. So, something I think that's worth noting. What are you seeing? When we were at your conference in September, I asked the audience, there was a couple hundred people sitting in there. I said, who has traded event contracts? And there was a good, at that point, it was maybe, I'd say 12 to 15 people out of the couple hundred. Then I asked the question, who in here has opened an account at Robinhood just for the sole reason to trade event contracts? And the answer was one person. If I ask that right now, I know that the number is going to be higher. Are you seeing crossover into your other products from people that are either starting on event and moving, or vice versa? Are you starting to see a lot of crossover activity?
So we are seeing there's a lot of crossover activity. And what we're finding is that the prediction market is a nice sort of way to enter into the Robinhood ecosystem, or someone who's been part of the ecosystem now has an interest in the prediction markets, and now all of a sudden they re-engage with us. And so it's been a nice tool for us to re-engage with dormant accounts, but also bring net new in there. I think what's really interesting about prediction markets is predictions are basically based upon sort of, in many ways, like an emotional thing, right? I have an emotional belief on something. I have an opinion, right? And I'm willing to put money on that opinion. So whether that's sports, whether or not it's economics, whether that's, I'll say pop culture, whether it's weather, whatever it is, you have that belief. And that belief usually drives you to take action. right? And so I think what's happened with these prediction markets is it's allowed people to now engage in this market in a relatively simple way with probabilities, but then it lets them move over into other marketplaces. We just announced, I think it was a little over a week ago, we've had our 1 millionth customer trading on the prediction market side. And more of them are opening up accounts with us because they are really intrigued with how this may fit into their portfolio. The nice part about it, Danny, is they can just look at the data and get comfortable with seeing how it is. So again, if it's a sports product that they're looking at, let's say it was the New England Giants game from last night, that's something they can look at, and they may watch it move it back and forth. They don't take action, but they can actually watch that market in real time. And then if they feel like taking action at a different time, maybe it's a week from now. I know both teams are on a bye coming up, but maybe it's a different game that they want to look at that has piqued their interest. And so I think that's what I find to be really intriguing. And that's why we've seen the volumes tremendously increase over, I'll say, quarters and months since we launched back and we talked about it at the Hood Summit.
Yeah, so let's talk about, so you guys are evolving quickly as well. The whole sector is kind of evolving. You recently announced a deal where you were acquiring an asset from the Miami International Exchange that will allow you basically to vertically integrate, I believe, your whole business in a joint venture also with Susquehanna, who will provide markets. You talk about that deal a little bit and how you kind of evolved to make that decision.
Yeah, I mean, look, I've been involved in the development of exchanges for the last, I'd say probably 10 to 15 years. I was a member of ErisX, which got sold to CBOE. I was a board member of FairX, which got sold to Coinbase. So we've always seen from a retail standpoint that sometimes the retail investor maybe wasn't top of the food chain when it came to the development of these exchanges because there was so much institutional flow already there. So as prediction markets have come into the market, what we've noticed is that there's been a shift in that focus, right? We're seeing a much larger focus on the retail investor and seeing where they can participate in the markets. And for us, what we realized very quickly was our clients have certain interests and desires that they would like to see from a market standpoint. And one of the best ways that we can actually reflect that is by helping them provide product. When I think of retail clients, I think that there's three key things they always look at, right? They look at product. What's the interesting product they have? What's the liquidity of that product? And then what's the price to trade at? Those three components become really important for clients to be able to engage in markets, because if one of those three start to wane, they start to move their attention someplace else. So for us, we had the opportunity to invest in, it's called Rothera is now the name of the exchange. We had an opportunity to invest in it, which allows us a direct line to be able to talk to our clients and then be able to talk to an exchange that says, hey, these are the products our clients are interested in. Maybe it's additional sports, maybe it's additional economics, et cetera. But it allows us to really now build product designed directly for our retail investors. It allows us to make sure the liquidity meets our client demands, because we know that liquidity can ebb and flow depending on what exchange you're on and how that works. But also then it let us understand how the pricing model will come in there. Because at the end of the day, our goal is to make sure our clients get the best price possible in the market. So again, going back to those three pillars, it allows us to bring that full circle. And I think more importantly, in a marketplace that's evolving as much as prediction markets, being able to sort of control your own destiny becomes that much more important versus having others control it for you. Now, that doesn't mean that we're not going to utilize other exchanges. That's not it at all. We will continue. It's the same model we use on the option side, which is we're going to look at different liquidity and again, see who has the best product, and we'll continue to route that accordingly. But what it does also do is it allows us to go over and be able to try to highlight what our Robinhood clients want to see. And if others exchanges aren't meeting that, now we have an opportunity for that to be able to get directly onto an exchange with Rothera that can be really, really important for us to get into market very, very quickly.
So what are your thoughts on the competitive landscape now? You guys obviously have a huge advantage and head start given the breadth. You guys were already operating in 50 states and doing all the other stuff before these things came along. We've seen CME and FanDuel. We've seen ICE, which owns New York Stock Exchange, invest in Polymarket. We've seen multiple deals. I won't go through them all, but dozens and dozens of deals. How do you think this thing plays out? Is this going to be, for some companies, more of a media play in some form, that they're kind of out there providing information versus exchanges, just exchanges only? It feels like everything's kind of going to come together, right? But how do you see that playing out? And I'm not asking you where you think your market share is going to be. I'm just asking how you think this thing plays out over the next couple of years.
So I think this is going to be a lot like the old options world was, maybe 8 to 10 years ago, where you had all of these exchanges popping up at the same time because nobody was sure who would win, right? And what it felt like was exchanges were the way to go. And I think that's what you're seeing. You're seeing a lot of DCMs and DCOs. Those are the clearing and the market acronyms in the prediction market in the futures world. I think you're seeing a lot of them pop up because of the fact that the incumbents have been so focused on traditional futures. Again, that's not a negative thing, but if you look at the traditional incumbents, right, you take the CME, I mean, a powerful indices, metals, FX, interest rate business. You take CBOE, powerful VIX focused type of there. And then you take something like ICE or New York Stock Exchange, which has been much more focused on commodities such as, orange juice and sugar and so forth. Well, that's been their key focus. I think right now, a lot of these markets are popping up because they're now seeing the opportunity with prediction markets, which are fully collateralized, as something that they can bring to the market relatively quickly, but they see that clients are super engaged with it. And so it's almost created a commoditization of the exchange world. And I think that's why you're seeing so many distributors and exchanges coming together, like you were highlighting, because you're seeing this just operate at a pace that we haven't seen since back into the crypto days about 5 to 7 years ago. So my belief is you'll still see more of these continue to pop up. I think what'll happen is they'll start to consolidate a little bit more. But I think what you're also seeing is those with distribution are the ones that are actually driving client interest, because it's much harder to capture a net new person and bring them on board and have them engage in a market than it is now, I think, in some cases, to build an exchange, which is a little bit of a weird thing to say. If you think back to the world that we lived in, exchanges were always the hard thing to do. Now it feels like though that may have kind of moved away a little bit for a short period of time.
That's a great analogy. All the options exchanges that kind of popped up. I do think that the institutional flow is coming.
Yes.
And I don't know how Robinhood is going to participate, because you'll be able to have a lot more liquidity in some of your event contracts, but it's definitely coming for sure. And just for people that are out there having, run a hedge fund and so forth, we would create our own quote events at Goldman Sachs. We'd call them knock-in or knockouts, whatever they might be. They were, kind of these deals that were one-off bespoke type things. It's been occurring forever. And so, but now I think what you're going to see is a lot of funds. Most of them have what's called an ISDA. I won't go into all the legal stuff set up, but it might be a simpler way, a liquid way, and a bespoke way to set up their own idea for an event that they can present to one of these companies. So I think we're in the very first inning of all of this. But once the institutions jump on board, JB, I mean, it's a whole new world for sure.
No, I mean, look, I think it's funny, right? You were at the forefront. You just didn't know that it was the forefront because it was that institutional side, right? I mean, you think back to where you were back with the housing crisis, and what you were building is you were basically, at least from my simple seat, you were doing event contracts that the housing market was going to go down, right, across the board. And I think what's happened now is that we discovered a way to allow this prediction market to be, I'll say, easier, more easily accessible to retail investors, right? We figured out a way to be able to open up accounts, provide liquidity, make the probabilities very straightforward for them. So I think building that became really powerful, but I think it built upon sort of the foundations that you guys had built from the institutional side. I think that is going to completely come back around. I think more than anything else, the institutional side was waiting to see kind of how things were going to shake out from these prediction markets. I think what they've seen is that these prediction markets now can expand into so many different types of asset classes that it becomes really intriguing for them to do exactly what you're talking about, which is take things such as structured products that used to be impossible for the retail investor to get to, and now make a version of them that actually can be accessible to retail investors, and then they can distribute them out through these exchanges. I just think it's going to be a really incredible, powerful product that will continue to evolve. And again, it's hard to believe where we are. 12 months ago, we were talking about only elections, and now we're talking about every single asset class that's out there across the globe. International, domestic, we're talking about interest rate cuts and economic numbers. You're talking about, Oscars, you're talking about climate change. All these things that people have strong feelings about have been now been able to put on an exchange and people can trade them in real time. I just think it's just a powerful, powerful opportunity, both from a product standpoint, but an information standpoint. And I know you brought that up earlier. I think the information thing, for the information component of this, it can be even more powerful, because now you can take institutional research, line it up against what I'll say sort of is retail research or what they believe, pair that up, you can really make great decisions in markets with that kind of data.
Yeah, for sure. All right. Back to September again. We were together. We brought up two things. Both of us, no offense to everyone out there in America, both of us loved Europe and the Ryder Cup, and they were trading at like 39 cents. That was a pre-Ryder Cup.
Yep.
And we talked about your Notre Dame Fighting Irish, right? And we weren't sure yet, would they make the playoff, what it would be. Well, here we are. And just to give people a real life example, they're certainly going to get into the playoff, so to speak. They're trading at 9 cents. I looked on your platform this morning. So call it 10 cents with the penny commission, right? So if someone were to go in right now and purchase that, and I did it today, actually, I can't bring it up on my screen, but I did it just because I know I don't think it's going to pay.
Yeah.
But to your point.
Ooh, that's hurtful. That's hurtful.
I know. No, I want to talk about this. So 9 cents seems like the right number. By the way, not Ohio State. You get the field. I think you got to lay like 1.5 times. Like, so it's not a great. Anyway, but the point is this: they win one round, Notre Dame. That's going to go to 16 to 18 cents. So to your point, there's ways to kind of trade it. So what are your thoughts on the 9 cent Notre Dame purchase there?
Well, so it's hard, right? So again, I'm a homer. You know it. So
yeah.
Look, I think when you look at the teams that are playing great, and I just was pulling it up at the same time here. What's really going to be interesting is later this week, right? So you're kind of at the end of rivalry, but now you're going into all of the championships. So you've got Ohio State and Indiana, two teams that, Ohio State hasn't played anybody of significance, I would argue. I get Texas, that was beginning of the year. Indiana had a big win at Oregon. I think it'll be interesting to see when those two teams come out. And by the way, they're both going to make the college football playoff. I think what's going to be intriguing is how does it then shake up? Because to me, it then becomes matchup. So if you got Notre Dame versus Oklahoma in Norman, that's a much different game than if you got Notre Dame versus Ole Miss in Oxford, right? And I think that's going to be an interesting thing. I like the chances of what Notre Dame has. I think they're balanced between passing and running, two amazing running backs, and then a defense are really good. I think the one that worries me more than anybody else is someone who we beat last year, which is Georgia. I feel like everyone's sort of sleeping on Georgia. I'm looking at them right now. They're trading at 11%. And I think that
there it is. Them? Yeah, I got it. Yeah, I know.
Hey, look, I didn't even know you had that there, but I do think
I'm born in Athens, Georgia. I'm a big Bulldog fan. So
I do think I think they're a really interesting. I think people are kind of sleeping on them. I think everybody thinks that Alabama is going to come in and sneak through again. So I think that's where it's been interesting. But I think to your point, what's interesting is every week these probabilities are going to move where you can then jump in and place a trade that you think is important to you. And I think that's really what's intriguing. And that's what we see out of our customers. We see a lot of interest as it leads up. Then during the event itself, when the markets are going on in real time, and that's the big difference, right? Is you can trade in real time as people are driving down the field one way or the other. You're getting all this information on probabilities. I mean, it's unbelievable the engagement that we can get during these games. And I think the college football playoff has done a great job of creating engagement and excitement.
I want to give one other example, and this is a non-sports example. So I was looking today. It says how low will Bitcoin go in 2025? And under 80,000, I know it's rallied here from 85 to 92. A lot of people trade Bitcoin on your platform. It's 32 cents. And under 70,000 is 10 cents. And the reason I mention that is if I'm sitting there as an investor or someone that's looking at MicroStrategy or strategy, whatever it's called now, and whether I want to buy calls on it, puts, whether I want to go short or long it, I know certain things that have to fall into place to make that happen. So if there's only a 10% chance, so to speak, that it drops under 70,000, well, I actually bought that, by the way, just for the record, because I would rather own that than try to buy. My point is, than try to buy puts on strategy, right? And do something. So that's how I see this thing evolving and looking at that. And those markets will self-fulfill and become deeper as people kind of use that. And that to me is really interesting, especially on your platform where I can actually trade the underlying at the same time and gather that type of information.
Yeah, I mean, what I found it super interesting is a lot of investors have told me that they didn't want to trade the physical, right? So they didn't want to necessarily buy Bitcoin or Ethereum, and they didn't feel like trading the future. And to your point, they didn't want to go and find a specific stock to do a call or put, and they want to buy an ETF, but they had a really strong opinion of what was going to happen. And so I think this actually allows an alternative way of people to invest. I have an opinion that I think Bitcoin is going to finish above 95. If I think that's the case, this is it's relatively straightforward. I don't want to say easy, but I think it's a simple way for them to look at it and say, hey, what's the probability? I can put a small amount of an investment in there and put that trade on, but I don't have to worry about all the different requirements associated with tax treatments and Reg T or physically owning crypto or not. And so I think it's a very interesting way. I think what we've seen is it's a good entry point for people, right? It's a way for you to become familiar and more educated on what Bitcoin may or may not be. Why is it moving the way it does? And then you can make a decision to move up into other ways. So I think it's a really interesting way for younger investors to access a market, or for people who don't want to own it that still have a strong opinion to be able to access that market.
Yeah, it's great. I would tell people go onto your platform, look at all your products, but certainly there's a lot going on in the event contract space for sure. And I know you're busy. I really appreciate your time. You guys have done an incredible job building this out. I know this is going to keep you, this part of your business is going to keep you very busy, but I know it's also fun for you. And by the way, given your analysis of the Notre Dame football team there, I think you have another career potentially. That was a bonus detail. I even tell you I was going to ask that question on this. So thanks so much for coming on the pod, and love to have you back again soon. And I think we're going to anniversary kind of the entry to this, which was March Madness last year. I think that might be great timing to kind of have you come back on and talk about kind of year-over-year comparisons and stuff.
Yeah, I mean, look, I what I'm hoping that your listeners are going to see is that we've built a very interesting product that caters to their needs, and we're evolving it rapidly. We are trying to find ways to build out not only on product but experience, and I hopefully think that they'll see it. But look, nothing is better than coming here, getting on your show and talking about it. And look, you're gonna hit me on sports. You're gonna hit a passion point for me, especially if you hit Notre Dame. If you hit this in the Yankees, I'm all over it. I may fall over and just be able to say, hey, my week is complete. So I appreciate you having me on again.
Okay, NFL Week 14 last week, another 1-1 performance, which makes me 16-15 on the season. Forget about the tie. The tie's a tie. It's a push. So 16-15. So teams are starting to separate themselves. I'm going to keep riding some current trends that I've been seeing. 2 picks this week. Bears still getting no respect, getting 6.5 points at Green Bay. Both teams have a little extra rest coming off games last Thursday and Friday. I see this as a last possession type game. Give me the Bears plus 6.5. Another divisional showdown with the trend of shorting Daniel Jones. Give me the Jaguars at home plus 1.5 in Jacksonville versus the Colts. It'll be a tight game as well, but I'd rather have the points in the home team in that matchup. Thanks for listening to the On the Tape podcast with Danny Moses. If you like what you heard, please subscribe on either Apple or Spotify to the weekly podcast, and please leave a rating and review, positive only. You can also watch on the On the Tape channel on YouTube and give us a thumbs up there as well.